Camber Energy NYSE MKT CEI is a popular stock with retail investors. Over the past couple of months, the share price has jumped from lows in August of 33 cents to just under $5 last week. It's up 115% year on year. Today, we will give you a Camber Energy Inc. CEI stock analysis. Number 7. The rally before the crash. Camber Energy is an energy and power solutions company based in North America. It owns the majority of shares in the subsidiary Viking Energy Group. Viking, in turn, has part ownership of multiple oil and gas fields across different states. These include Texas, Louisiana, and Mississippi. To understand why the Camber Energy share price crashed, I first need to appreciate why it rallied so much recently. There are a few different reasons for this. The first one is the fact that commodity prices have been rising. Oil hit $80 per barrel late last week, quite a change from spring of last year when prices briefly traded below zero. Higher oil prices obviously help the business, as the produce sourced is worth more in value when sold. Another reason for the rally was confirmation of a deal with ESG Clean Energy in late August. This agreement allows Camber Energy to use ESG's patented carbon capture system in the United States and Canada. This system is good for the environment as an electricity generator, so makes the company more popular with green investors. A report causing the share price to crash. Unfortunately, the benefits that the above provided for the Camber Energy share price were undone with the publication of a report from Kerrisdale Capital. In the opening paragraph, it boldly states that Camber is a defunct oil producer that has failed to file financial statements with the SEC since September 2020, is in danger of having its stock delisted next month, and just fired its accounting firm in September. It also claimed that Viking Energy Group has a negative book value, along with a host of other negative comments about the business. Naturally, the report saw a lot of investors sell stock. Given that the company was popular with retail investors, I think a lot of panic selling went on yesterday. This compounded the situation and led to the large fall in the Camber Energy share price. It'll take some time for people to verify the allegations made in the report by Kerrisdale. It's also worth noting that the fund was already shorting Camber Energy before the report was made public. This means that the firm stands to profit if the share price falls. There's nothing wrong with writing about a stock if you own it, but the publishing of the report was obviously going to cause some investors to sell quickly. So I'm cautious about believing everything written and will let the dust settle. I'd imagine Camber Energy will issue a statement soon clarifying some of the allegations made. I'm not going to be investing though, as I already own other oil and gas stocks. The industry is volatile and high risk. Even if I didn't own those other stocks, I'd want to do my homework before investing here. This stock could be like buying Amazon in 1997. I'm sure you'll agree that's quite the statement from Motley Fool co-founder Tom Gardner. But since our US analyst team first recommended shares in this unique tech stock back in 2016, the value has soared. What's more, we firmly believe there's still plenty of upside in its future. In fact, even throughout the current coronavirus crisis, its performance has been beating Wall Street expectations. Number 6. CEI stock higher on retail investor enthusiasm. There's two ways investors can look at damning short reports. On the one hand, these reports tend to highlight concerns investors may or may not have been aware of. These risks may be fully priced in or not, and that really depends on how investors model out a given company. In the case of CEI stock, this looks like a pure momentum play. Retail investors bid this stock higher on the way up. On the way down, panic selling brought inverse price action to this stock. However, one of the key reasons behind Camber Energy's previous rise was the company's low float and high short interest. These factors remain and are even more pronounced than before. Accordingly, those looking for a short squeeze candidate have an even better one today. Accordingly, it appears the majority of today's rally in CEI stock is momentum-driven via retail investors. Whether this rally will hold into tomorrow and next week remains to be seen. However, this is a stock that has a lot of room to make up to get back to the levels it was trading at last week. Number 5. What is going on with red-hot Camber Energy today? Today, Camber Energy NYSE CEI is a stock that's rebounding hard. Along with the broader market, CEI stock is seeing buying pressure taking the stock higher. However, unlike the major indices that are all up around 1.5% at the time of writing, Camber Energy has popped more than 75% at the time of writing. This impressive increase comes on the heels of what has been a rather impressive drop in CEI stock. Over the past 5 days, CEI stock has still lost roughly half its value, and that's including today's 85% pop. Number 4. What's the reason for this? Well, Camber Energy has been the target of a short seller. A short report released by Carisdale Capital insinuates there's no reason this stock should have popped in the first place. The company points out that this is a highly leveraged stock, one with a going concern for its core asset and one that saw its accounting firm leave recently. These aren't attributes high-quality companies tend to have. That said, this rally suggests that market is more than brushing off these concerns. While yesterday's sell-off indicated investors weren't placated by Camber Energy's response to these allegations, today's manic buying pressure suggests perhaps buyers needed a day to digest everything. Number 3. A smaller company amid energy titans. This relatively little-known company is overshadowed by much larger energy industry titans such as Exxon, XOM, and Chevron, CVX. Nevertheless, Camber Energy caught investor attention in early 2021 as the penny stock was heavily mentioned in Reddit's Wall Street Bets forum. The stock roughly tripled in value in the span of a few short months, but then lost all momentum and began to trade at new 52-week lows. A recent resurgence which jolted the stock back to life as shares rose nearly 5-fold from their summer lows has since been pushed back on the news of the lawsuits. Number 2. Camber Energy, an example of stock price volatility. Camber Energy is a prime example of a stock that can undergo extreme volatility on insignificant or even no news. As a case in point, the company lost 20% on just one day, Tuesday, October 20th, 2020. Yet on the previous day, October 19th, it soared higher by more than 50%. There was no specific catalyst that justified either extreme move during these 2 days. Such price swings have become a recurring phenomena with Camber Energy stocks. Just a few weeks prior to the volatile action described above, Camber Energy acknowledged in a press release that its stock is experiencing unusually high trading volume. At that time, the management noted that it was not aware of any reason for the increased volume or increase in trading price. The company's management even went so far as to clarify that it was not aware of any material information regarding the company or its operations that has not already been made public. It is therefore clear that the unusually high trading volume is coming from sources outside of the company, especially via the subreddit Wall Street Bets, WSB. Wall Street Bets is composed mostly of retail investors and traders who crowdsource their investment ideas. Some of these trading ideas focus on companies with an extremely large percentage of shares outstanding being shorted. The logic in investing in a heavily shorted company is that a surge in the stock would push out short sellers from their position. To close a short position, the investor has to buy the stock, which would add even more buying pressure and push the stock incrementally higher. Is this a fair tactic? That is debatable. Some argue that investors are free to do as they wish with their money. Others argue that it is unfair because it puts existing investors at risk and at the mercy of short-term traders looking to capitalize on swift moves. In Camber Energy's case, long-term shareholders that believe in the company's vision and ability to execute would see their CEI stock price forecast fluctuate by the day. As of late September 2021, the short interest in CEI stock stands at 6.14 million out of the total 104.2 million shares. Number 1. Stock price forecast. The one analysts offering 12-month price forecasts for Camber Energy Inc. have a medium target of $781,250, with a high estimate of $781,250 and a low estimate of $781,250. The median estimate represents a plus 74,404,661.9% increase from the last price of 1.05. In Camber Energy's case, investors should be paying particularly close attention to any updates on the company's previously unannounced ambitions to diversify and expand into green technologies. Camber Energy's current ratio is most likely to increase slightly in the upcoming years. The last year's value of current ratio was reported at 0.64. The current debt-to-equity ratio is estimated to increase to 0.77, while EBITDA margin is projected to increase to 8.89. Do let us know in the comments what you think of this stock. Please subscribe to The Stock Advisor. Thanks for watching.